You're syncing up and tuning in to the Lending Link podcast, powered by GDS Link, where the modern day lender can dive deeper into the future of data, decisioning, and credit risk solutions. Welcome to the show, everyone. I'm your host, Rich Alterman, and today we're syncing up with Lisa Bonalle, Chief Executive Officer of GDS Link. Lisa's impressive career spans over 30 years in the financial services, loyalty, fintech, and martech industries. Lisa joined GDS Link as CEO on September 7th of last year, taking the reins from GDS's co-founder and former president, Paul Greenwood, who, along with Eve Du, our CTO, founded the company in August 2006. GDS Link is a global credit risk leader, delivering innovative decisioning solutions and data analytics, leveraging its Modelica platform. With over 17 years of experience, GDS Link empowers financial institutions to understand customers, mitigate risk, optimize lending through data aggregation, advanced analytics, and responsive decisioning. Its solutions span the customer's journey from acquisition to retention. Prior to joining GDS, Lisa served as president of Verisk Financial Group, a division of Verisk Analytics, a leading data analytics and risk assessment firm, where her collaborative approach and skilled direction yielded substantial business growth and innovation within the marketplace. Under her visionary leadership, Verisk Financial orchestrated the successful acquisition of multiple organizations, bolstering its prominence within the financial services sector. This strategic trajectory eventually led to the group's acquisition by TransUnion in April 2022. Before joining Verisk, Lisa served as the president of loyalty solutions for Affinion Group, where she transformed the business into a customer-centric organization and expanded the international loyalty business. Her career also includes senior management position with Argus Information and Advisory Services, where she was responsible for global partnership and new product development, positions in the credit card division of Citibank, where she was president of Citicard's largest portfolio, and JP Morgan Chase, where she held the role of Chief Strategy Officer during a period of substantial growth. Beyond her professional achievements, Lisa is a passionate advocate for diversity, equity, and inclusion, and she is deeply committed to philanthropy and volunteerism. Lisa holds an MBA with highest honors from New York University and a BA summa cum laude from Providence College. In this episode, Lisa and I will review some of the data points on her background, her vision for GDS for 2024 and beyond, and industry trends that she feels could impact lenders and how they might address these. But before we dive into the interview, please head over to our LinkedIn and Twitter pages at GDS Link, that's GDSLINK, and hit those like and follow buttons. If you had not done so already, please subscribe to our podcast on Apple Podcasts, Spotify, or wherever you prefer to listen to your podcast. All right, now let's get synced with GDS Link. Welcome, Lisa. Hope you're having a great week so far. Thanks for being my first guest in the new year. I'm really excited to have you joining me today. And where are you joining me from today?
Hi, Rich. It's so great to be with you. I am joining you today from New Rochelle, New York, which is a suburb of New York City in Westchester County. And for those trivia buffs in the audience, it is also the home of Rob and Laura Petrie from the Dick Van Dyke Show. I may be dating myself a bit there, but I get that quite a bit when I say New Rochelle.
As you know, I spent a lot of time in New Rochelle myself growing up. I think my grandparents didn't live too far from where you actually live today. And actually, the Dick Van Dyke Show is one of my favorites. It's definitely a classic. So before we get started and talk business, let's get a little more personal. One of your pastimes, as I know, is competing in triathlons. So how long have you been participating in these, and how many have you completed so far?
That is true. I do compete in sprint distance triathlons, which, just for the point of full transparency, is the shortest distance triathlons. But I do love it. And I've competed for about 10 years. COVID slowed us down for about 2 seasons. I compete with a team, and I really love it.
What is a distance of a sprint marathon or triathlon?
A sprint triathlon generally is about a half-mile swim, about a 15 to 20-mile bike, and a 5K.
So what is the coldest water you had to dive into?
Yeah, so we swim in the Atlantic. It's pretty cold, and we swim usually in September. We do our big races. I would say it's in the, 60s, 70s. Probably that's the coldest.
Do you do that at like Jones Beach or?
Yeah, or off of Sandy Hook, which is in northern New Jersey, the northern Jersey shore. Sometimes lakes in Connecticut as well.
Oh, cool. Okay, great. Thanks for sharing that. Obviously, as a triathlete, you're very disciplined. And when you think about how you have converted that discipline into your work life, how would you say they actually kind of line up?
Yeah, it does translate very well. One of the things that I really like most about triathlons is the cross training. I train with my cousin, and we often say we like the training more than the actual event itself, because you're training different muscle groups, you're training different sports, different distances throughout the training period. And so personally, as an athlete, you always have your own strengths and weaknesses. And then you're strategizing the best way to prep and be peaked for your race. And I think those same skills translate really well into business. You're continuously learning, stretching, and growing new muscle, new disciplines. You're playing to your strengths, and you're always looking at ways to work on and improve your weaknesses. So I find that mental discipline translates really well into my work balance and my work life.
Oh, great. How much time do you spend training every week?
So I don't do it year round. I generally will train for 1 or 2 races a season, and I'll start training in April, and our races will generally be at the beginning of September and at the end of September.
Cool. Yeah, I ran cross country for 4 years, and it's funny. I could jump in a pool and swim 50 yards without pushing myself off underwater with no problem. But every time I ran, I was so short-winded.
Yeah, it's definitely different muscles, different breathing techniques. One of the other things that I really love about triathlons, and certainly the ones that I participate in, again, we're all amateur athletes, you have to wear your age on your arm and your leg, because if anything happens to you, they need to know how to take care of you. Right. And it's such a great lesson in don't judge a book by its cover, because I'll be thinking like, oh, I can't run another mile. I can't bike another mile. And then I'll see somebody pass me with like a 78 or an 80 on their arm. I'm like, wow, if she can do it, then so can I.
Great. So look, somebody with your experience, your talent, your background, when it came to looking for a new opportunity, you certainly probably had the pick of the litter. So, maybe share with the audience, what were some of the attributes that GDS possessed that really helped you make your decision to join us?
Yeah, I love that question. It was really important to me in taking that next chapter and next step in my journey where I went. And so there are so many things that I admire about GDS as a company that led me to this role. Key among them is the fact that GDS is the market leader in providing digital decisioning software. And that speaks to many of the trends that I've seen in financial services over the past few years, right? Creating more frictionless customer experiences. The number of companies that have reported they are on a digitization journey, whether they be legacy banks, fintechs, smaller credit unions, everyone is digitizing. Our children do not know what it means to walk into a branch and to fill out paperwork to take out a personal loan or a mortgage, right? They live in an entirely digital world. Yep. And so as the world is digitizing, banks, financial services, fintechs, their origins are in tech. On that digital journey, digital decision-making, frictionless customer experiences are really important. And GDS has led the way there for over 15 years. That is only expected to grow over the next 5 to 10 years. The number of banks and financial institutions that are moving away from their legacy systems, putting a digital front end, a digital interface for their customers is only growing. So I love the space. I love the opportunity. I love the market leadership position that GDS Link has. We have an exceptional solution. We add great value to our clients and to their end customers. And that market is only growing. What's not to love? Cool.
Well, look, I'm glad you joined us. Welcome aboard. So as we said at the beginning, you have over 30 years of experience in the financial services space. And so when you kind of reflect on your career, maybe you could share some of the accomplishments that you're most proud of and kind of think about how did they shape your leadership style?
Yeah, it's such a great and interesting question, right? You always think of that quote when you're looking back on your life. Are you going to remember that hour you stayed late at work or the time you were at your children's softball game, right? But over the course of a lifetime, there's lots of accomplishments, both big and small, wins and losses. And the big ones stand out. But to me, the little everyday experiences do as well. So there's kind of 2 things that come to mind for me, immediately off the top of my head that have had a really significant impact on my career and then my leadership style. The first one is actually the experience of working on the merger of 2 banks of equal size, roughly. Chase and Chemical Bank merged. I was working in the credit card division of Chase when that happened. And I was put on the integration team responsible for the migration of our balance transfer systems. And every night for nearly a year, we had a merger update, and I learned all the different systems and subsystems, of the credit card business. I learned how a transaction gets from the point of origination at the point of sale to settlement on the back end. And that wiring diagram got set in my mind, right? You're learning, it's basically like the architecture of a house or of a community. And once you learn a business from the roots up, that wiring diagram's in your head and you never get rid of it. And that taught me a lot. I got much better at any job I had in and around consumer financial services and small business financial services, because I understood the systems, the technology, how the data flowed, how the transaction flowed, how the money flowed. And that was probably the biggest aha moment of my career. Because I learned through that experience, I'm always going to get to the grain when I take on a new job. If I move into a tangential industry, I need to understand how this works at the most granular level. And then I can, from there and that understanding, make the most of my contributions. So that's pretty technical. The second experience that's really shaped me, Rich, is that I have had the great fortune of having some amazing bosses throughout my career. Not every one of them, but I've been very blessed, and I've had really amazing people leaders teach me how to be a good people leader and how to be a people first leader, how to lead with grace and kindness without sacrificing business needs and strength of purpose and discipline in achieving your business goals. That's an art, and I'm fortunate to have had great role models in that regard.
Yeah, it's interesting. If I can send a word of wisdom to our younger audience today, and that is to really seek out a mentor, because it's going to be so important to your career as you move forward. And it doesn't have to be somebody that you necessarily work for. It's a personal friend. It could be someone you just happen to meet somewhere and just kind of stay in touch with them. The other thing is that opportunities sometimes just fall on you. As you were talking about the merger between Chase and Chemical, I was remembering when I worked for American Express, and I became actually it was Citicorp at the time, and I became part of the pricing team. And we were going out and putting proposals together for a private label credit card offering, and how we had to break down every single transaction in our business and understand what did it cost for a customer service call, what did it cost to process a payment. And when you have that opportunity to really get that granular, it really is something you carry with you, almost like riding a bicycle. Right?
Exactly. You can't unlearn it, right? And you learn how deep you need to go to get to real understanding. And then, the other thing you're noting, which I think is a great advice too, is sort of, look for opportunities, look for that, opportunity to raise your hand, to stretch yourself, to stay late and do something that nobody else wanted to do, because there's learning in those opportunities at every turn.
And the other thing I like to promote, and I know you probably feel the same way, Lisa, is be curious, right? If you don't understand something you're working on, and you could dig a little more deeply now, there's so much with chat and there's so much information out there, but also reaching out to your own manager and saying, hey, can you help me learn more about why our client does this in this way, for example. So anyway, just for our younger crowd, it's some words of wisdom. So Lisa, you spent a lot of time at Verisk and Argus. We talked about that. But maybe there are people in the audience that are not familiar with those two companies. So maybe just talk about what they did and how what you did might resonate with some of our listeners.
Yeah, for sure. Well, Verisk Analytics is a holding company, and they are focused on owning businesses that are data and analytics businesses. They focused on 3 domains: insurance, energy, and financial services. And Argus was one of the companies, it's now owned by TransUnion, but it was one of the companies in the Verisk Analytics Financial Services division, which was the division I ran. It was the largest company within that sector.
Mhm.
And so again, remembering everything Verisk Analytics owns is a data and analytics company. Argus is a company very much related to the types of solutions GDS Link provides. Argus provides data and analytics solutions to financial institutions across the globe. So in that way, it's relevant to our GDS Link customers, right? Where we provide technology, connectivity, decision engines. Argus delivers benchmark reporting, for example, to help a financial services firm compare their business performance to a peer. How am I doing in setting my origination credit line? How am I doing in setting price for the mid-risk tier of customers, right? You get a view of relative performance of your portfolio to a group of your peers, never one peer at a time. And that can help you set strategy, adjust strategy, increase profitability. So very much related to what GDS Link does. They're interesting flips to each other, right? Argus can give you sort of offline, high-level portfolio comparisons. What Argus isn't is embedded in the customer workflow. What GDS Link is deeply embedded in the customer workflow. So I find them really complementary. And, I believe there's great upside as I bring my experience from Argus over to GDS Link to build out our analytics and data solutions. We have put a stake in the ground around analytics and data solutions. It's a growing part of our business. I think a lot of my learnings from Argus could be applicable, not directly in the same manner that Argus did it, but building out more data solutions, analytics solutions for our clients that relate to the types of services GDS Link provides. So for example, today we do some model monitoring and model building for our clients. I see that as a really key growth vector for GDS Link going forward.
Well, you touched on a little bit of my next question. So you have a long tenure now at GDS. We're going on a little over 4 months. And,
Yeah.
I know I had the opportunity to sit through your initial town hall meeting. And even then, which was only, I think, 1 day into the job, you kind of mapped out some of your strategies for 2024. Obviously, you just talked about analytics, but, what are some of the other things that you see GDS focusing on this year, and what are some of the benefits that you feel that it will bring to the market?
Yeah, I love that. Well, I mean, some of our listeners may know this, but some may not. For the past 2 years, GDS Link has been hard at work at upgrading our technology and our platform behind our core decisioning software. And, I am very confident that with that technology build behind us, we now have the best-in-class platform. So one of our key goals for 24 is to focus on getting out there and, both selling a new generation platform to new customers, making sure that we're upgrading and migrating our existing customers to our best-in-class platform and the latest version of our software to better meet their needs. One of the other key goals that I see for GDS in 2024 is to serve our customers across more of the customer lifecycle. So primarily and traditionally, our focus has been on working with our clients on account origination. Now, that's not to say we don't work across the lifecycle already. We already, with a number of clients, work on account management, portfolio review, customer management solutions, collections. Our goal this year is to expand the number of clients we serve with more of our account management and collection solutions, continuing to move through the customer life cycle with our clients beyond that point of origination.
Yeah, and there's such a wealth of data out there now, certainly with open banking data. If a customer has permission themselves at the point of origination and that ability to do a refresh on a monthly basis, combining that with credit bureau data. And, as you said, we already have clients that are doing that very successfully. And it's definitely something that, especially in this increased level of delinquency, we're all seeing now, credit card debt increasing. There's just so many foreshadowing events that you can identify to help better strategize on how you're going to work your accounts moving forward. So thanks for sharing that. So certainly we're in a market where new entrants are popping up every day. And that's a good thing from one standpoint, and may not be a great thing from another. But, as you talk to the audience today who maybe are evaluating our type of technology and coming across some other companies in the market, what are some of the things that you'd like to share with them, and how we, really kind of stand out from the competition?
Yeah, and that's true. I am a free market economist at heart. That is for sure. I firmly believe that good, healthy competition is good for our clients. And more importantly, it's good for us. It forces us to be on our toes, to be our best, to stay sharp, to continuously innovate and think ahead of the emerging needs of our clients. And that pushes us to be a better version of ourselves each and every day. In terms of the competitive advantages I feel that GDS Link brings, first and foremost, we have deep industry experience, right? We've been doing this for a while. The vast majority of us are former lenders. We've been bankers. We've stood in our clients' shoes. So we know the challenges they face. We know the pressure they're under as the credit cycle shifts, right? Those pressures change. And additionally, as I think we've already noted, a real point of distinction for us is our analytics and data solutions team, right? That is something where we bring a unique set of solutions to the table that our nearest in competitors don't bring. So the upgrade on our platform, the combination of analytics with our software solutions really distinguish us in the marketplace. And that competition pushes us to expand, to grow, to sharpen our solutions each and every day.
For the last couple of years, I've been heading up partnerships at GDS, and I know that you have a very strong background in partnerships and passion for it. So as we talk to some of our audience here today, both existing partners as well as potential partners, what are some of the key factors that you believe really help contribute to a very successful partnership?
Yeah, thanks. I love partnerships, right? I have spent a great deal of time cultivating and growing businesses significantly through successful strategic partnerships. And I have a real appreciation for the nuance and complexity of managing partnerships well, right? So I think of partnerships like a three-legged stool. They work best when we create a win-win-win situation, right? Like each partner brings something unique to the table to a mutual client that individually we couldn't bring on our own, or we couldn't bring it as well. So those are the three legs of the stool: one partner, the other partner, and the client. And if you took one leg away, one partner, for example, the stool would be less stable. It might topple over. So when both partners bring unique strengths, unique data assets, unique technologies to bear to create value for a mutual client that you couldn't have delivered without either partner, that is partnership at its best. And GDS Link has a number of wonderful partners that we work with that bring that, three-legged stool together and create that great stability and great value for our customers.
So as part of your vision, Lisa, do you also see the opportunity where partners actually co-develop products?
Yeah, absolutely. I think that is, there's almost like a hierarchy. If you were to build a grid up and to the right, you could resell each other's product. That's partnership, right? We are collaborating to grow our business and grow your business, right? You could have referrals, you could have rev share. But when you co-invent and your ingredients become more stew than meat on a plate and potatoes on a plate, when it's all mixed together and it's so intertwined you can't untwine it, we've co-invented something, then you're really moving up the strategic partnership ladder. And I think that we have great opportunity to do that with our partners.
When you were describing the value of Argus data to lenders, financial institutions, I would envision that a potential partnership might be considered between us and Argus. Is that something?
It may be. Very true.
And I know somebody that used to work there, so I expect good pricing. Okay, so it seems on a quarterly basis when I do these podcasts, there's always some new buzz term that I'm having to interject into the conversation. So of course today, ChatGPT, generative AI, and large language models are some of the latest buzzwords our audience is encountering on a daily basis. GDS has already been leveraging machine learning techniques in our custom model development. You mentioned that a few minutes ago. So, thinking about the 2024 product roadmap, do you envision incorporating ChatGPT, generative AI, maybe large language models into any of our solutions, not only augmenting what we do today, but maybe beyond that?
Yeah, it's a great question. And there's certainly a lot of buzz around these topics today, right? From my perspective, it's really important for us internally to distinguish the technologies like machine learning applied to mathematical models, regression models versus generative AI, right, which ChatGPT falls under. And as a starting point to really think about best use cases, where is generative AI, ChatGPT most beneficial, right? Where is ML in a model most beneficial? And to continue to learn and develop that. For example, I'm not sure that using generative AI, ChatGPT in a mathematical model is the best use of that technology at the moment, right? Machine learning, on the other hand, has been used in mathematical modeling, financial modeling for regulated companies for a good number of years now, where we know that those techniques are additive to our forecasting models. I think where we sit for GDS Link in 2024 is kind of in a learning mode. I think, of course, we'll continue to use ML in the models that we build for our clients and continue to educate ourselves and stay abreast of generative AI and where that might best be used in the solutions we put out to clients. Where I actually think we might start is internally. Are there things we could automate? Are there things we could augment, do faster, do better, make less errors by incorporating some generative AI or ChatGPT into our internal processes? So an indirect way of using generative AI to benefit our customers, because we can do things faster, better, with less error, while still using the ML in our mathematical models.
Yeah, thanks for that. So, of course, with any new technology, there's always the good side of it, and there's always the evil side of it. When we see what's going on with the deep fakes, it's scary. Just read an article before I hopped on this call where there were, I guess, robocalls going on during the New Hampshire primary where it was Biden's voice telling people they didn't need to go bother to vote. So lots of things there. So certainly fraud is an area that our clients all contend with, and first party, third party, synthetic. We saw a lot of uptick during COVID. We talked about digital lending, so customers not standing in front of you, even more risk. So, as you think about GDS and fraud and some of your experience in the past, kind of where do you see us maybe trying to play a greater role with our clients?
Yeah, I am really excited about the opportunities for GDS Link and fraud, right? Because I think that solving fraud is a problem best solved by the many. And then the fraudsters are always still going to be a step ahead of you. But we sit at a very unique intersection, right? Today, we work client by client. And even if we might observe fraud or we see clients catching fraud with some of the tools they use, we're not creating a repository of known bad actors, known good actors, and sharing that back. But we could, with our clients' permission. So this is a journey. How can we develop unique fraud solutions? Because we sit uniquely at an intersection, the creation of a technology platform that helps clients do what they do best, right? But in doing that, if we were to look horizontally across our client base, with their permission, we might be able to create a consortia-based approach, a way to add to whitelists or blacklists or identify pattern geographies of note, right? So there's some AI, ML in that. There's some data sharing that would have to be built out. But I think of this as sort of greenfield, but with a company and technology and know-how that is well suited to help each and every one of our clients address a problem that's only going to grow as the world digitizes. So the good news for us is the banking world is digitizing, which means a digital-based decisioning system has great upside potential. Along with that, we're no longer, as we talked about earlier, going into the branch, sitting face-to-face with the community banker, right? I love the movie It's a Wonderful Life, right? Everybody knew George Bailey, right? And he was the lender and the savings and loan, the building and loan. Nobody makes loans that way anymore, right? We are moving away from that. And therefore, if we don't sit face to face, if our kids don't play on the same lacrosse team, then how do I know that you are who you are in a digital world? There's great upside, frictionless lending, faster lending, more data driven. The downside is there are bad actors, and bad actors are always going to try and penetrate and take advantage of vulnerabilities. So I am extremely excited about fraud as a growth vector for GDS. I think we're going to have to really think big and frame our solutions there. But that's something we're starting this year and we'll continue to develop out for our clients.
You just had me do a little flashback, thinking back to when I was in the Visa MasterCard program, Bank of Boston, just getting introduced to the Issuers Clearinghouse. That Visa MasterCard mandate, right? You had to report into it. You didn't have to use it, but you had to report. And that was back in 85, 86, right? Mm-hmm. So that was kind of your first consortium mandate. It was a mandated use of a database to help prevent fraud. So interesting to see. Yeah, it'd be interesting to see how we move forward there. So it's still unclear if the Fed will cut interest rates anytime soon, which remains stubbornly high. While inflation is down a bit, consumers are still struggling to make ends meet. As of November 2023, so only a couple months ago, over 60% of Americans were living paycheck to paycheck, with 20% struggling to pay their monthly bills. It's a trend that has come to stay, according to Amber Carroll, Senior Vice President of Membership and Lifecycle Strategy at Lending Club, one of GDS clients. Credit card debt is at an all-time high. And I share these statistics a lot, and they don't change. So they're getting worse, not better. So in addition to challenges these factors present to lenders, there are other critical events, including regional conflicts, new COVID variants, and of course, the upcoming election, which I just mentioned a few minutes ago, talking about the New Hampshire primary. So my question for you is, what adjustments do you feel lenders may be considering as they review their credit policies and pricing strategies for 2024? And with all of your great experience, what suggestions would you like to share with them?
Well, there's a lot in that, right? So let's kind of decompose it, right? So first of all, credit cycles come and go. They are cyclical. And based on the rising rate environment we've been experiencing over the past few years, right? Stubbornly high inflation, as you noted, it just ticked up again, right? It's down off of its high, but it did tick up. We haven't quite tampered it and, controlled it, although the Fed's done a wonderful job managing through that. And there were some unexpected silver linings in COVID, right? There were some, there were layoffs, but there was aid. And there was an increase in savings during that period of time from some of that. Now that wave has sort of rode itself through. The tide sort of normalized again. You've got rising interest rate environment, prices are higher, and for sure, indeed, consumers are stretched, which means in the credit world for lenders, delinquencies and losses will rise, right? And then you get into this sort of vicious cycle, like lenders tighten their credit criteria because they are in business to make their money, make a profit, make their margin. And that means then when you tighten your credit criteria, sometimes the most vulnerable, those that are at greatest risk, are squeezed even tighter. And that tightening has another impact on people's lives. So I think about this in many ways, and the most interesting way is that it is complex. There's no silver bullet, and that for our clients, my suggestions are twofold. One, don't use blunt instruments, right? Like a credit score is great, but it's nuanced, right? There's usually a matrix of behavioral analytics, scoring analytics, trended analytics that will help you refine your audiences or the actions you want to take. So the less you can use a blunt instrument and the more you can use a matrix or a more complex set of criteria to put consumers into homogeneous groups and then take more targeted actions, I think the better off you're going to be, right? And then the second thing I would say is, prior to COVID, we entered COVID with loan losses at an all-time low on a percentage basis relative to balances, right? And with unemployment at an all-time low. So focus on collections strategy, pre-collection strategies. Those haven't been an area of focus for a while, but that's coming back into the foreground. Both of those things, right? Building refinement of your credit criteria, looking at account management and portfolio review with a more granular lens for action, building your collection strategies. Both of these areas are areas where GDS Link is expert at assisting our clients, and we would love to assist more clients in those areas. But those are the areas of focus as the credit cycle shifts, and lenders need to strengthen their toolbox in both of those areas.
Well, thank you for that. In addition to the ones I've outlined, are there other headwinds or tailwinds in 2024 that you think could really have a big impact on the industries that we serve?
Yeah, I mean, the headwinds sometimes are easier to see. The tailwinds, I think we're all kind of counting on. Will there be an easement of interest rates kind of mid to end of year? That's still to be determined. In terms of the headwinds, I absolutely think there is continued momentum. I wouldn't call it a groundswell yet on the importance to our industry in the coming months and the coming years around the issue of consumer data privacy. So in Europe, GDPR is now firmly entrenched, and the regulators there keep making inroads, like what data can be used in pre-screening customers for lending, what data can't be used, what is permission data, what are the penalties if you violate that? They're steep. In the US, for the moment, we've taken a state-by-state approach, which frankly could become really unwieldy for lenders to manage, right? Absolutely. Now, today, we have privacy laws in a few states, and CCPA, mimics GDPR to a light extent, the California privacy law. That's now been in existence for a while. They're refining that again. And there are a handful of other states that have mimicked California. But for lenders to have to manage the nuance of Iowa's law looks like California, but the existing financial services relationships are included or excluded. Managing that in a business, financial services lending, which has been long data-driven, right? Way ahead of retail or telecom or other areas that are now starting to use data. The accessibility of the data we use to make optimal decisions, and the nuance of managing state-by-state regulation on the data you can use could be real complicating factors and tremendous headwinds for our industry. So I think we've got to watch that. As an industry, we've got to be vigilant. We should be organized, and the lending industry is about how we approach that. It's been sort of back burner as a federal legislative item. There are pending legislations in both the House and the Senate. They haven't moved forward. We've been distracted with other things, but those are things that we should keep an eye on. They could become significant headwinds for the lending industry.
Yeah, I was reading yesterday or the other day about some proposed legislation in Europe that could actually make it more difficult to use credit scores. So yeah, we definitely things we need to keep on. So since we mentioned Europe, so GDS has clients in 64 countries today, with headquarters, of course, in the US, key offices in the UK, Philippines, and Spain. So as you think about our 2024 strategy, what are some of the other countries that you could really see us putting more effort into in addition to the US and other areas that we...
Yeah, I mean, I want to talk about that in two respects. We do have clients in 64 countries today. That has occurred because we have great clients who have expanded their relationships with us that have taken us to 64 countries, right? We don't today have a team planted in 64 countries, but that doesn't mean we can't grow from where our customers take us. If I think about where we are proactively focused on growing our business, growing our teams, growing our presence in the market, there are areas we play today, but we're going to focus on expanding our presence in the future. So the UK is a market that we've been in, and we've made an intent to strengthen our team there, to strengthen our go-to-market focus there. Mexico and South Africa are also markets where we have presence today, we have customers today, but we want to intentionally grow those markets over the next year or two.
Lisa, many banks today are, saddled with inflexible legacy technology that has impeded their ability to innovate as quickly as fintechs. Some of these legacy systems, and there's been a lot of articles about this recently, that rely on COBOL, are really seeing a brain drain as COBOL programmers age out. Actually, I thought there could be a whole business opportunity there alone. But anyway, so, as we think about these companies, one of the things we talk about a lot is that we don't need to think about a full wholesale rip and replace, right? Because asking a financial institution to do that is a long, painful process. So how do you see that GDS, can coexist with those legacy platforms and really help these lenders become more competitive in the digital lending environment where consumers, you mentioned this earlier, really do expect that low friction, immediate decisioning of loan app.
I mean, I actually think, I'm joking about the COBOL programmers. My dad worked for the Reader's Digest company in information technology, data systems, his whole life. And when they were going through Y2K, they had to get technologists out of retirement to come back and program COBOL to, carry over the Y2K issue. So it's real. It is a challenge, right? I mean, the colleges that teach COBOL on the side probably could make a lot of money if we train some young kids to do that. But the layering of technology is what's really happening. And it's happening in a great way that's going to allow companies that have that technical debt not to have to pay it off all at once. And GDS Link is a great example of that. Like, because we are a point solution, right? We are a digital first point solution that can integrate with banks and financial services companies as they set their schedule for paying off their technical debt, modernizing their systems, digital transformation, as many banks are calling it. That our point solution, which can connect into your system, whatever it may be, in essence, we create that digital first layer, right? We create a digital front end that creates the ability to offer loans digitally, create a seamless customer experience, decision those instantly. All of those things come from our modern technology layered over legacy technology. And it enables banks not to have to make all of those changes at once to get into the digital game. We're a great partner in that regard. You can leapfrog some of that technical debt and get to market sooner with digital opportunities by using GDS Link.
We talked earlier, one of the questions I had put forward was about competition. And with that question, I was focused more on third-party competitors. So, of course, another competitor we contend with is the in-house technology focus of build versus buy. And certainly in the time I've been with GDS, we've come up against that a lot, right? Where,
absolutely.
Well, should I build versus buy? So, if you were talking to the CTO of an institution, startup bank that's really saying, well, I could just build this myself, what are some of the arguments you would put forward where really the buy decision is actually a better one? And I know that you might have this in your own career.
And I have, right? And that's true. And it's an important decision. And evaluating build versus buy is probably a really important part in deciding to go with GDS, right? I think that for me, there's two things. One thing that any client needs to consider on the build side is, what are the opportunity costs, right? If we've got something built that you are going to go build, and I would submit you could build it. It's possible. It will take you time. It will take you money. We've got a lot of data connectors that are already pre-established. You'd have to go out and build those, get the relationships, right? Get the data flowing, keep the pipes open that are broad enough for all that connectivity. So bigger clients could certainly evaluate the build decision, evaluate the opportunity cost of building out their, point-based digital decision system, or updating their, parts of their COBOL-based legacy system, right? You can make those trade-offs. And there are trade-offs that say, well, we want it, it's ours, it's proprietary. I think I would counter that you as a business should invest in those things that set you apart from your competitor, right? Let us do the connecting, build the technology. You focus on investing in the product, the differentiation, the client base you serve, right? The customer service you provide. Let us focus on the technology. For other smaller clients, you're kind of in a situation where you may not even have the level of investment in any given period that you need to build the system internally. It may just take you a long time because you are budget constrained, right? So I have often had to make that build versus buy decision. One factor that I think is important to consider on internal systems is that prioritization queuing. There's always trade-offs. Everybody needs those resources internally. And do you have more leverage to meet a timeline with an external resource, right? You may get 80% of your internal system built in the third quarter release, but you don't get prioritized again until the second quarter release of the next year, right? So there's leverage in being able to use external resources and hold them to a timeline. And then you might have to wait if there's an implementation and you want to change it. You got to get back in your systems queue and you might have to wait for those changes. So the nature of the business we are in is customer service, right? We're building one thing, we're building it repeatedly, and we are good at building that system, making changes to that system. So I would submit we have, deep expertise in the solutions we provide, where your internal resources are more jack of all trades, right? And so there's a learning curve there, there's a prioritization, there's a waiting period to develop it internally. I'm not saying that might not be the right decision for certain customers, but I think if you were to build the pro and cons list, there's a lot to be said for leveraging external resources who build one specialty system and are expert at it.
Right. And, one of the things that we didn't talk about as far as what we see as a competitive advantage, and you kind of touched it, you mentioned professional services. So one of the things we refer to it internally, we talk about like the hybrid model that we present, right? That you could do it, we could do it, or we could do it together.
Yeah.
Anything you'd like to add about that? Because I think that's an important distinction for our company.
It really is. And we did touch on it lately, but if you're a less mature financial services business, a new lender, right? You may have the expertise you've been able to hire, but that's it, right? You're starting up, you're less mature, you're 2 to 5 years old. You have your own budget constraints. We can bring to bear man years of experience that we have learned along the way, that we can guide you and accelerate your learning curve and state of maturity, because we can bring that expertise to you. Again, as you noted, not every client wants that, but we have the opportunity to bring that to our customers when they want it. So again, it's sort of you can do it, we can do it together, or we can do it for you.
So keeping an eye here on the time. So we got 2 more questions for you. We touched on this a little bit with the data privacy, but certainly our lenders operate in a highly regulated environment with new regulations being proposed frequently and implemented on a periodic basis. For example, several states, as you mentioned, have adopted or considering regulations like California Consumer Privacy Protections, and the CFPB has proposed significant reductions in late fees on credit card issuers, which some project could cost the industry $9 billion. And of course, we're all waiting to hear about the final Rule 1033, which is focused on open banking. Yep. So, when we think about our clients, that when they're evaluating systems like GDS, of course, you have underwriting, you have broad things that you think about, but certainly compliance is one of the things that's on the forefront of their mind. So what role do you feel solutions like GDS Medallica play in addressing these various regulations? And, how do we kind of think about those as we're thinking about our product roadmap?
Yeah, it's a great question. And there's a lot there, right? Largely, we work in a regulated industry, right? Our clients are regulated or could be regulated in the future, right? And we chatted a bit about the use of data privacy legislation. and more states adopting that. That could be a significant headwind for lenders. Our job is to think about what is that baseline of data? How could you make equally good decisions with less data? Becoming expert at that and helping our clients with that. There's always changes in legislations and pending legislation. One of the key roles I think we have the opportunity to play at GDS is to ensure that we're a real knowledge partner and thought leader with our clients on these issues. So being fully knowledgeable about legislation, the legislation that our clients operate under today, changes to that legislation, and roadblocks or hurdles we see coming could be very valuable to our clients. It means that we have to shift our mindset a little bit, constant learning, growth mindset, but we should be a partner that you can bounce ideas off of. We should be fully knowledgeable about the regulatory landscape. It is not to say that takes the burden off of any lender to make their decisions about how they comply with regulations or build their business, but our job is to be a strategic partner. And in order to be a strategic partner, we need to know this industry as well as any of our clients. We need to have a point of view, and we need to be willing to share that point of view with our clients when asked, or offer it if we think there might be somewhere that they have a blind spot. That means a little bit of learning and growing and reshaping ourselves on our side.
Okay, so as we wrap up, it's easy to predict that some of our listeners are GDS clients and then some are potential prospects. So a shameless plug here. Before we wrap up, is there any direct message you have for them as they think about their current or potential relationship with GDS Link?
Yeah, and it's a nice way to wrap up. It kind of takes us all the way back to the beginning of our conversation. And I'd say the one thought I'd love to leave both our existing clients and new prospects with is one of the points I made at the very beginning. GDS has just spent the past 2 years upgrading our decisioning platform, ensuring that we are bringing you a best-in-class solution. Additionally, we are expanding our analytics, our model monitoring solution set, in order to provide a really differentiated value from the competition. And lastly, we intend to earn and keep your business by becoming that strategic thought partner, helping you navigate the changing economic landscape and regulatory landscape. So those are our strengths. That's what we bring to the table. We hope we're bringing that to each of our existing clients, and we hope we own the trust and business of our prospects out there.
Well, thank you for that, Lisa. This is Rich Alterman, and we've been syncing up with Lisa Bonalle, CEO of GDS Link. Thank you, Lisa, for joining me today and sharing some data points on your background, your vision for GDS for 2024 and beyond, and industry trends that you feel could impact lenders and how they might address these. We hope you've all enjoyed this podcast. Please stay connected with GDS Link and the Lending Link to listen to future podcasts and catch up on ones you've missed. Thank you, and make it a great day. Thanks for listening. If you've enjoyed today's episode, please be sure to subscribe on Apple, Spotify, Google, or wherever you listen to your podcasts. And be sure to leave us a review. Follow us on LinkedIn and connect with us on Twitter at GDS Link. That's at GDSLINK. Have a question for the show or have a specific topic you want us to cover? Hit the link in the description to drop us a note. Thank you for lending us part of your day. Make it a great one.